Hello investors and welcome to Nostala Wealth. I am Mahendra Rao and today in this video we will be talking about liquid mutual fund. In our previous video we have tried to make you understand about debt mutual funds. What are debt mutual funds? What are the different categories of debt mutual funds which are available? In the previous video we have made you understand what are overnight mutual funds, and in this video we will be talking about liquid mutual funds. So let us understand what are liquid mutual funds. What are liquid mutual funds? Liquid funds are basically debt funds that invest in companies or lend to companies for a period of up to 91 days, and they will not invest more than 91 days papers. So these are considered the safest fund among all the mutual fund categories owing to their extremely low lending duration. So if the lending period is less, so the security gets matured in 91 days and then it is reinvested again. So the risk is less. So now we have understood what are liquid mutual funds. Let's understand what are the advantages of investing in liquid mutual funds. The first advantage is it is suitable for putting aside any emergency fund. There is near to zero risk of loss if someone invests for at least 1 month. Within a month, if you want to park some money somewhere, you can park it in liquid fund and there is zero risk of loss. This category of fund has given up to 50% or even 100% higher returns than savings bank account. If you have some money lying in a savings bank account, they will give you somewhere around 3%, 4%, but this fund will give you somewhere around 5%, 6% returns. So it is an advantage we should be taking when you are investing in this fund. So after understanding the advantages, we have to understand how does the liquid fund work, how do they generate returns in the portfolio, and how we as an investor will be benefiting by investing in a liquid mutual fund. So to understand that how liquid fund work, you need to know where they invest and how they generate returns. So where they will be investing and how will they be generating returns, let's check it out. So where do liquid funds invest? Liquid fund will typically hold securities that are short term in nature, they are of good credit quality and which are highly liquid. So these are the norms set by SEBI which helps to reinforce these fund features. So this is how they will be investing and this is where they will be investing. They will buy securities which are short term, which have good credit quality and which are highly liquid, and they will invest only in commercial papers and which will not have more than 25% exposure in a particular sector. So they will not go beyond 25% in any particular sector. So they will not invest in any risky asset class as per SEBI norms. So it is very important that your money is not stuck in this fund, and hence SEBI has defined the rules and the norms for the particular category of the funds. So they will invest 20% of the fund in cash and cash equivalent any given point of time so that they will be able to meet the redemption demands immediately. Since it is a very low duration fund where investors with a horizon of 3 months should be investing in this particular category, because the securities they will be holding will not be more than 91 days. So if you are planning or have some liquid cash available for a horizon of 3 months and you want to park it somewhere for a few months or few days time, like 15 days, 30 days, 45 days, 2 months, then you can opt for liquid fund. So this fund will always have 20% in cash and cash equivalents, so that some investor comes and asks for the money back, so they that have that redemption demands met. Now let's understand what are the sources of earning, how do the fund invest and how do they generate returns, because they have to give interest on the amount invested to the investors back. So what is their source of earning? Where do they earn money from? Right? They are investing in commercial papers which are less than 91 days of maturity, which are of good credit quality. So the interest will be lesser in this fund on the papers because these are in short term horizon. So this fund basically earn income from two different parts. Any debt fund, any debt mutual fund will earn income from two different parts. One is the interest income and second is the capital gains. So they will buy a bond at one price, so there will be a buying price, and they will sell at a one price, that will be the selling price. So difference between them will be the capital gains. But in this liquid mutual fund there will be hardly any capital gains because there will be no bond price movement which will be happening since the duration is very less. So major earning that the fund will be earning is from the interest part, the interest whatever is generated from the 91 days paper, and that will become a part of your earnings. So let us understand the interest rate and bond price movement. When interest rate falls, the bond prices generally goes up, and when interest rate rises, bond prices fall. There is a negative relation between bond prices and interest rates, and this is quite strong for long term bonds and not for short term bonds. And when we are parking our fund in liquid mutual fund, we are parking it for a shorter horizon. So longer horizon bonds will impact much more than a shorter horizon. So when we are investing in liquid funds, we do not have significant capital gains or losses in this. So we are investing in a portfolio which are less sensitive to interest rate movements. Hence, we will be able to generate better returns from the portfolio. Whenever anyone is investing in a liquid mutual fund, we will be able to generate better returns from the portfolio, because our sole earnings will depend on the interest rate only. So if you see in a rising interest rate environment, liquid funds often outperform other debt funds because the interest rates earnings are going up and their market value suffers only to a limited extent due to capital losses. And as I have told earlier, that we are in a very low interest rate risk, and these are very less sensitive to interest rate movement, and the earnings, whatever bond papers they have purchased from the market, that rate has to be delivered by the borrower. Hence they are able to generate better returns like 5 to 6% from the portfolio. So now when we have understood where is the liquid mutual fund investing and what is their source of earning, where is that is coming from, and that is solely the interest and no capital gains that will be generated in the portfolio. Now the question arises, who should be investing in a liquid mutual fund? So let us understand who should be investing in a liquid mutual fund. The first is the investors with a very short term investment horizon. Someone wants to park money for less than 3 months, that investor can park their money here without taking too much of a risk, so that there is no price fluctuation and no risk of capital loss, and they will be able to generate positive returns over a shorter horizon. Investors who invest in bank deposits, someone who keeps a good balance in savings bank account or who has a balance in fixed deposit, here that money can be diverted towards liquid mutual funds so that they will be able to generate better returns over a period of time. If we see, savings bank account provides 3 to 4% of interest rate, which is quite lower, and liquid fund generally provides returns between 5 to 6% and sometimes beyond 6% as well. So here you do not have to lock in your money. Just like savings bank account, you can withdraw any given point of time, and the horizon is also for not more than 3 months. So if you are looking to invest your money, or you want to park your money, or if you keep good balances in your fixed deposit or savings bank account, you can divert your money to a liquid mutual fund. Investors who want to keep contingency fund. So contingency fund, we know that 3 to 6 months of our expenses has to be parked in somewhere. Generally people tend to keep it in a savings account or a fixed deposit. Now we have another option, which is a liquid mutual fund. You can park the money here so that you get better returns from the portfolio that you have parked somewhere, because this fund will provide you safety and better returns both. Now investors who want to park funds temporarily, there are many times there are big transactions which are happening, like buying a property or even buying a car or buying some good jewelries. So that money has to be parked somewhere temporarily, that can be parked in a liquid mutual fund, and so that you have a good amount of returns created from that portfolio. Now the best way of investing in equity is to route it through liquid mutual fund. Whenever you are parking your money in equity mutual fund in lump sum, what you have to do is invest the money in liquid mutual fund and do a systematic transfer plan from liquid mutual fund to equity mutual fund on a weekly, monthly or quarterly horizon, so that you can average the price of the equity and take the advantage of rupee cost averaging. So what you are doing is you are investing in liquid mutual fund. Liquid mutual fund will give you the interest component, as well as you are not timing the market and buying at a regular basis, so that your prices are averaged. So this is someone who wants to route investment in equity. You can park your money in liquid mutual fund and route it to equity mutual funds. So here we have taken few examples of liquid mutual fund. If you see the last 1 year returns, like Axis Liquid Fund, Mahindra Liquid Fund, Canara Robeco Liquid Fund, every fund have been able to deliver more than 6%. Now if you compare this with savings bank account, wherein you earn 3% to 4%, here you are earning 6%, and this fund is as liquid as your savings bank account. You can withdraw this money immediately. If you withdraw today, the money will hit your account tomorrow. So that liquid that money is, and you will be able to generate better returns from the investments. Now we have taken example of Mirai Asset Cash Management Fund. This fund has been able to deliver more than 6%. The asset allocation, if you see, the debt is 92% and cash equivalent is 7.75%. If we see the credit rating of the fund, A1 plus category, where they have invested is, the holding is 72%. They have invested in sovereign at 19%. Cash and cash equivalent is 7.75%. Out of which AAA rated is 0.2%. So these are generally all commercial papers where they have invested in, wherein the credit rating is as per the chart which is there in the screen. So this is how they have divided their portfolio. And if you see the fund style, the credit quality is high and the interest rate sensitivity is low. So a good credit quality papers with lower interest rate sensitivity, and then too they are able to generate returns of more than 6% per annum. Now if you see the portfolio, the top holdings, all investment is in 91 days paper and few are 182 days. So if you see RBI T-bills 91 days, RBI T-bills 182 days, Ultratech Cement commercial papers 91 days, Larsen and Toubro commercial paper 81 days. So this is how they have created the portfolio of a liquid mutual fund. This is just one example of Mirai Asset Cash Management Fund. And if you see the credit rating, it is sovereign A1 plus, sovereign A1 plus. So your money is diverted toward a good credit quality papers which have a zero risk of default. So your risk of losing money from a liquid mutual fund is negligible. Now if you talk about taxation, there are two components what a fund will deliver. Now let's talk about taxation on liquid mutual fund. Liquid mutual fund, there are two components of taxation which will be applicable. One is on a dividend and one is on the capital gains. So dividend is taxable in the hands of the investors as per the new norms from the finance ministers. So whatever dividend will be coming from the portfolio will be taxable in your hands. And then there is a capital gains. First is short-term capital gains. If you are redeeming your money within 3 years, and whatever profit you are making from selling the liquid mutual fund will be taxed as per your tax slab. For example, if you have invested 1 lakh and if you withdraw 1,10,000, that 10,000 will be clubbed to your income and taxed as per your tax slab if you are withdrawing this money before 3 years. Now if you withdraw the money after 3 years, here this won't be much important because the money which you are investing in liquid mutual fund is a short term in nature. So major tax applicability will be of short term capital gains. But for a better understanding of capital gains, let's understand what is a long term capital gain tax. If you are selling after 3 years, you get advantage of indexation. What does indexation mean? Is your purchase price is inflated as per the inflation or the prevailing inflation rate or the past inflation rate. So after 3 years, the purchase price was 1 lakh. The inflation is adjusted for the next 3 years. Supposingly it is 6%, 7%, 8%. So 1 lakh 6,000 is added, 7,000 is added, 8,000 added. Your cost is adjusted as per the inflation, and then the profit is taxed at 20%. So you have that advantage of long-term capital gains. And also when you are investing in a debt mutual fund, your taxation is deferred over a period of time till the time you withdraw from the fund. So this is all about liquid mutual fund. So let us understand in a summary. Liquid fund aim to provide investor with combination of safety, liquidity and reasonable returns. Their investment strategy focuses on short-term high-quality securities, and they are structured to minimize interest rate risk, making them suitable for investors looking for stability and quick access to their fund. All in all, a good category to invest in, where you want to invest for a shorter horizon, where you don't want a credit risk or a default risk or interest rate risk. To avoid all this and generate better returns, you can park your money in liquid mutual fund. Before investing, do consult your financial advisor and take a help of a financial advisor whenever you are planning to do your investment. Thank you so much for listening. Signing off, Mahindra Rao. Until we meet again. Bye bye.